Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everyone, checking back in on oil, and this is the hourly time frame. And if you are a short-term trader, there is a nice clear break here on Friday where we had our clear tightening range, support of 52.82, resistance of 53.11, tighter and tighter. Look at the volume absolutely disappear. When the volume gets extremely low on a tight range, you know a break is imminent, and you can be watching the channel that you're trading in for a signal on that break when it occurs, and that will be accompanied by a volume spike as well. So the clear break occurred here at 5 a.m. it looks like. We had a spike in volume, the highest hour of volume we had seen in over a dozen hours, and it was a clear bear break. And look at the back test and rejection. I love technical analysis. 52.82 support, and remember where that level came from? That came from back here. That was down at 52.78, so I had that level off by a couple pennies. So 52.78 was that support on the pullback, so I left that line there. And we can see the price bouncing off this support. We rejected just below it, holding it, losing that support, back test, bounce rejection, and then further movement to the downside. So now we have a new support level to be watching and a clear resistance level to be watching. And this support level is going to be right down here. Put that at 52.27. And I adjust it by looking at previous action as well. So I would put it right there at 52.34, the reason being 52.34 was resistance back here, and now here we are acting as support. So when I'm deciding where to put support and resistance lines, normally I would put it right there because it looks nice to have all of the lower wicks hitting that line. But then I look back at the previous price action and say, there's some action around that level, but it would make sense to put that candle or that line at that resistance point, and we're still closing above support on every hourly candlestick that does test that level. So that's the new support level I'm watching. Just like we had this channel back here, now we've got a new channel between the 52.30s and 52.78 resistance. Checking on the daily time frame to see how we ended this week, and it was with a pullback. It's an inside candlestick, and check out my inside candlestick video for more information on that. But it's pretty much just showing a tightening range, and we can watch for a break or the high or the low the next trading day to indicate a direction for that day. So we're watching the lower high pattern still in play here. 55.21, 54.29, and now 53.47. Bulls want to see a break of 53.47 and continuation to the upside. Let's see how significant the weekly upper wick is. And it's not significant. It's a nice higher low, and the bulls buying the dip. So the weekly time frame, the bulls are still very comfortable seeing where we're coming from here. And after a pullback week of consolidation, still maintaining higher low supports, bulls buying that dip, and we're looking for bullish continuation. So again, let's zoom out on this weekly time frame, because where we are currently trading, if we can get above 54.21 And let's see, we did get above that level. We got up to 55.21. So breaking this resistance here, the next level that I'm looking at, and I'll zoom in. So I'm looking back here at the start of 2015, and we broke this resistance on this little bounce attempt. And now we are looking at previous support from back in May and June of 2015. And those levels are up at 56.54, 56.86. So I do believe the bulls are still very much in control of this weekly time frame because we are breaking the lower high trend on the long-term pattern. And now I'm looking for continuation up towards the $56 range. I would not be surprised at all to see oil at testing $60 psychological resistance in Q1 2017. And you can see that very tough $60 resistance where we rejected for 2 months before seeing an all-out dump. So that's a very, very important level going forward. And having a year-plus outlook on oil, $60 needs to become support, and we need to see a break of 62.56, the highest price we saw on that bounce attempt, because there is some nice movement to the upside and some nice potential for further gains into the 70s and 80s if we can break that level due to the lack of price history and due to the magnitude with which we dumped down, not really setting resistances on the way down. So the bulls are just trying to head back up towards that $60 level, and then we're going to have a really big battle at that level, in my opinion, and that's going to dictate the midterm trend on oil. So the bulls are still in control, in my opinion, and it would require losing $50 psychological support to start questioning that. But really, this uptrend support line and maintaining higher lows on the weekly uptrend wouldn't be destroyed for the bulls until 42.23 broke. So there's a lot of wiggle room for the bulls to still remain in control on this weekly time frame with the action we've seen in all of 2016 and now the start of 2017. So I appreciate you watching. We'll check back in early next week, as always, and see how this weekly candlestick continues to play out and if the bulls can rally and head back up towards the $54 range after the nice buying of the dip this week. Thanks for watching. We'll see you then.